Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value, and I'm ripping through the comment section, trying to answer everything I can. It says, hi Andy, I really appreciate your content. Since I subscribe to your channel, my portfolio is still growing. Nevertheless, I have some concerns about unusual situation, which is now. I mean, huge public debt, purchasing billions of bonds by the Fed, the reason that the 10-year yields are so low, all the time, and trillions of dollars injected into the economy. I'm afraid that it could have a significant impact for the economy. Could you please share with us what your feelings are about it and how to prepare a portfolio for a bad scenario? If you guys think that a bad scenario is about to happen, maybe put some of your investments into free rides. And a free ride is you keep your profits in the investment, you take your original amount out, and then keep it in cash if you think that something bad is going to happen. And it makes you feel better, sleep at night, and you're not worried about it. But if you're worried about it, I mean, you can put some of your investments into free rides, take some money off the table, and keep it as cash. Up your cash amount if you're worried about it. I'm not as worried. I think the structural move is there. We could see a short-term dip, but I'm going to hold through it, and I'm just going to ride this thing higher throughout. But that's my approach. That's completely different than others. And seeing your portfolio down 30, 40, 50% is a gut checker. And if that's something that you don't want to live through, you need to have some more stable investments, because the stuff that we are in is very volatile. It's going to move all over the place. So, and remember, I'm not 100% in what I'm telling you guys. I have a commodity portfolio. I have other investments. I have physical precious metals. I have real estate. It's diversified amongst all that stuff. This isn't constituting the majority of my wealth. It's actually probably more like 20%. Just an FYI. Now, another person says, Andy, by hook and crook, these crooks who are the authorities will keep rates low and negative. They have no choice. Then the Fed coin will be the savior, and every transaction and where it came from recorded and taxed, thanks to the fascination with Bitcoin and some sort of savior. This is so predictable. And other people have said that in that scenario, if they can track everything through a Fed coin, which I don't want. I like privacy. That's another reason why I think gold and silver as a form of wealth preservation, and even I think grow, will eventually have a massive premium, because Bitcoin has all the same problems of being online. They can track everything. They can track every single Bitcoin transaction that is done on an exchange. And then they can shut exchanges down. They can do all sorts of funky stuff. They can tax it like heck. And gold and silver, you're out of the system. You're going to get a massive premium at some point for being out of the system and having it be the most private investment that you can potentially have of any asset. So I think that that will have a massive premium going at some point when people figure that out. I have some created this presentation here, and I know a lot of people worry about deflation. And I'm going to go back to this. The green line, so we've got two lines here. We've got the M2 money supply in the black, is the black line. Inflation is usually delayed a little bit and is the red line. So you could have an increasing money supply, and then usually inflation will follow. And usually what happens over time, if you look before 1990s, like the mid 1990s, look before this, what you'll see is you'll see the red line and the black line. What they do is they kind of go over and cross each other through time. They just kind of cycle back and forth. If you look on the right-hand side past about 96, 97, you see the black line is always above the red line. Now, in history, if that's the case, that if the black line were to go down and the red line were to cross it because they're delayed, this is meaning that the data before 1996 is untampered with. It means you have clean data. The M2 money supply goes up, and then you see the inflation go up as the M2 money goes down, and they cross at some point. So for instance, they printed more money, and then the inflation was delayed, and they crossed right here. They crossed. And then eventually when the inflation rate will drop, they crossed again. It crosses here twice, crosses again twice, crosses again twice. It keeps crossing back and forth. Look over here. There's no crosses after 96, 97. Why do you think that is? I can tell you why. At this point in 1980, 1996 is when they started to manipulate, and they went from a 1980s based inflation calculation to a 1990s based to a new calculation. I think that was when the CPI was put in. That's where they started understating inflation, was right here at this point. And all of a sudden, we don't have a problem with inflation. It's really low, even though they're printing 9-10% of money all the time. If you look at shadow stats, it says that we've had an average inflation rate of about 9-10%, which follows the M2 money supply very closely, just like the old calculation fell very closely in line. So we have 9-10% inflation. They're just understating it. So we do have inflation. And if you look at this chart, I put the green line is at 0. How many times in history have we had deflation? Once, twice, 3 times. That's it since 1945 or 1940 if you go all the way back here. And it was barely deflationary. What's coming up and what I think they have to do is they're going to have to print like heck. This is the difference between average annualized returns. This is pension assumptions and reality. So this is what pension funds and investors count on. It's an average return of 7%. That is in the blue. What pension funds and investors actually get is down in the green. And you can see this big gap or shortfall, which is in the red. This is the shortfall that pension funds and investors are left with in the red down here. And we're going to have a problem. It's probably going to start manifesting itself very soon, 2025. And people aren't going to get the money that they were promised for pensions. This is how well funded are pension plans in your state. You can see that green is pretty good, like Wisconsin's good and SD is good in comparison to all the other states. Kentucky, Illinois, looks like New Jersey is very bad. Colorado's pretty bad as well. That's where I live. And what I think the Fed is doing, since there's so much debt out there and future promises, is that they're going to have to inflate like heck. They are going to have to inflate to make this all work. I don't think that they're going to tell people, no, you're not going to have money. They're just going to give money back. That's not worth very much. That's my guess. And the way that you protect yourself against this is through inflation investments. You can use physical silver outside of the system or physical precious metals in general. They're going to do very well, I think. Gold's going to be a good bet, and platinum and silver. I also think the mining companies are going to be a good bet, and I think all these commodity companies that we talk about on the channel are going to do exceptionally well. Now, I'm just going to go back real quick. Every time we hit one of these little areas where it dips down, like 2009, what did they do? They printed a bunch of money. You could see this thing go up as this goes down. So they were fighting this move downward with more money being printed. And that's why it gets all distorted on this side as well. So what I call this, and I've got the thing, it says, I call this Make It Rain by Fat Joe. Got a handful of stacks, better grab an umbrella. I make it rain, oh. Got handful of stacks, better to grab an umbrella. I make it rain, oh. And here's Powell. He's printing like heck. He's making it rain, and that's what they're going to do. If they think at all that they're going to have a deflationary problem, which is going to collapse the system, remember, their power is derived by the dollar, and they back it by an army, or by a military, I should say, not an army, but a military. They're going to make it rain. If we have shortfalls, got a handful of stacks, better grab an umbrella, because I'm going to make it rain. That's what's going to happen. Powell, whoever's in office, or whoever's the head of the Federal Reserve, Federal Reserve Bank, they're going to make it rain. And they're going to keep making it rain because the system only is supported by inflation. If we have long-lasting deflation, everything will collapse. What are the best investments in that collapse? It'd probably be the physical precious metals. I don't know what Bitcoin would do. Who knows with that? But I know the physical precious metals have basically lasted every single bout, every single deflation, every single hyperinflation, every single inflation. It's been around the entire time. They've built many economies. Some of the best economies were built on gold and silver, and that being used as money. I don't know if cryptocurrency is building an economy, but I mean, we'll see. They're brand new. And I haven't opened up completely to the crypto world yet, but if they fall far enough down and it looks like something's okay, maybe I'll put a little bit of money in it just to appease some crypto lovers. But I'll put a little bit in just maybe for the heck of it when that time comes. It has not come yet, and I'm pretty patient. If you guys like the presentation, give me a thumbs up. Thanks for listening. This is Finding Value.